Good evening and welcome to this episode of The Big Picture. Big Picture, Big Conversations. This is where humor meets depth. Now, for this Monday, I'm your main co-host, Tom Mukwana, and as usual, I do this with my co-host every week.
Justine Wanda. Hi, guys.
Justine is a comedian, satirist, human rights defender. I'm just the reporter. She does a lot more than me. But good thing is we do this every week. Justine, don't look at me. And this week, we are very, very excited to have two guests in studio with us. First, we're going to introduce Gift Kori. Gift is the manager, listing and capital raising at the Nairobi Securities Exchange. That's like our is it the New York Wall Street?
New York Stock Exchange.
New York Stock Exchange. And Gift will be explaining one thing throughout this entire episode. The initial public offering, he'll explain what that means. The initial public offering of the Kenya Pipeline Company, Kenya's oil/fuel pipeline owner, the one which distributes oil from the coast in Mombasa all the way to countries as far as DRC. It owns, I believe this is the upstream distribution of fuel in the country. But you'll be explaining, we won't be speaking about what they do in the market, although that's also important. Today you're going to explain to us why we should be investing in Kenya Pipeline Company, what an IPO means, and I think that's the best place to start. India, Justin, what does that even mean?
Yeah, what's an IPO?
First of all, thank you for having me. I'm really delighted to be here. I've seen the work that you've done in the previous episodes, and let me just start by saying kudos. Let's get right into it. So what is an IPO? So an IPO by definition is an initial public offering. What that basically means is how a company transitions from being a privately held company where you have 1, 2, or 3 shareholders, and you now invite external shareholders to come and be part of the company. That could involve the existing shareholders saying, let's give away 10% of this company to however so many investors to raise new capital, and that capital could be to support the company's expansion plans. So, for example, if we were running a small kiosk and we wanted to now scale that up into mini mart, or let's say a supermarket. Of course, there is capital that's involved to do that. So what we will do, as if we were 3 shareholders, then we would say, let's go out and look for other investors to join us, put money in the table, so that we can now
come up with
a bigger outfit. Now put money into the new investment. It could also be that we have run this business and grew it from a small kiosk to now a big supermarket chain, and we want to pay ourselves, and sort of for the hard sweat that we've put in, we want to put money back into our pockets, and we want to really unlock this value that we've created. So what we will do is we'll say, let's sell a portion of our shares or our ownership in the company to other investors who will come in and run the company going forward. What that then does is it creates a liquidity event, which is basically cash. We sell our shares in the company for new cash from these investors, and that money goes into the pockets of the shareholders. So basically that's what an IPO is. So companies use platforms such as the Nairobi Stock Exchange to issue shares to the public. The public could be anyone who's an interested investor in that company, to either, raise new capital to support strategic expansion plans, or it could be for them to unlock liquidity, which is basically to convert the value that they've created over time into cash and exit and replace themselves with new shareholders.
Last week, Justine, you remember we spoke about Safaricom?
Yes.
That's not an IPO though. That's a different kind of selling of shares.
No, it's still an IPO.
It is.
It's very
Which
much.
type is it?
Sorry, Safaricom.
Yes.
I digress. My head is still at KPC. No, Safaricom is not an IPO.
Yes.
So Safaricom IPO'd in 2008. If you remember, They came to market looking for 50 billion, for those who were born.
I was like, I don't know.
Yeah, so 50 billion for 25% of their stake, so for a 25% stake. And that was one of the biggest IPOs in Kenya. Over time, that value has grown, and the government, being one of the key major shareholders in Safaricom, are then looking again to now sell a portion of their shareholding to create liquidity. And we said liquidity is basically selling your ownership in exchange for cash. And that cash can be to support your own private needs. So that's a divestiture, which is meaning you're reducing your stake in the company and diversifying away from the company. In other words, if we had another business, say a car wash, and we wanted to go now into the salon business, we could sell a portion of our ownership stakes in the car wash and take that money and go invest it in the new salon business. So we are diversifying away from the car wash business. Yeah, so that's the divestiture that's going on with Safaricom.
These two events are similar but also dissimilar in so many ways, because Safaricom, the shares are not being sold to the public; they're sold to Vodafone. Is it Vodacom? It's Vodacom.
Vodafone. Yeah.
Yeah, it's a subsidiary in South Africa.
Yes.
And for this KPC one, it's sold to the public. And this means that people like Justine, yourself, I don't know if for you to be a conflict of interest, but Justine and I and you possibly could be able to buy those shares. And how much are they valued at right now? And what informs that valuation?
And also, how many shares can people buy, like as a regular layman, or is there a cap for every other person who's allowed to buy the shares?
Okay, so let's go step by step. So Safaricom is currently trading at 29 shillings. Safaricom, being a major shareholder, is trying to do what we would term a investor to investor kind of sell. So shareholder to shareholder sell. And that's why it's not being floated to the public. Now, being a listed entity, they could still sell their shares in the open market. But this is more of a private deal between the government of Kenya, being a shareholder in Safaricom, and Vodafone, being also a major shareholder in Safaricom. Now, there are many ways that Safaricom could sell its shares, including offering these shares to the public. So they could actually say, over the next few years, over the next couple of weeks, we want to reduce our ownership in Safaricom, and we are selling this number of shares to the public. It's a 15% stake at this valuation, which is usually not typically the valuation that is currently on the market. So for example, the offer is at 34 shillings. That's the deal that they have struck with Vodafone. But the shares are currently trading at 29 shillings. So there's a premium there of 5 shillings. And that's because the valuation has been done on a private deal basis, not based on what the current market price on the publicly traded platform is. Yeah.
And for that specific deal, it's shareholder to shareholder. For this deal, I think Justine had asked a question.
Yeah.
Could you please, before
I'm curious
throw in
to
mine?
know, as a person who's on the outside, and I'm curious, there's like 11 billion shares that are up for people to buy.
Yeah.
How much can a member of the public buy? Can I just buy the 11 billion if I feel like it, or has it been segmented in various sections so that people can only access a certain amount? Yeah.
So in this particular IPO, they've created categories, different investor categories, and each of those investor categories have been allocated a certain amount of shares for the IPO.
Each investor?
Not each investor category. Okay. So there are 5 investor categories. Number one, we have a portion that will go to the retail investors, 20%. There's 20% that is going to go to the institutional investors. And by institutional investors, I mean fund managers, your insurance, the big investors. and then you have another 20% which will go to the region. Remember, the KPC does not just serve the Kenyan market. It's a strategic asset within the region, supplying fuel to Uganda, Ethiopia, and other neighboring countries. So there's also an element of giving the regional players an ownership stake into KPC, so that you can sort of let's do this thing together, and it's adding value to all of us, and it creates an stickiness among the regional players. Then there's foreign investors who can also buy up to 20%, and then there's an ESOP, which is employees of Kenya Pipeline who have also been allocated 5% in the deal. Yeah.
The sale. We'll be getting to what makes that transparent enough for the public, the terms that you're using, like foreign investors. But now we've just been joined by our second guest, Rufas Kamau. Rufas, asante for coming. Rufas is a financial markets researcher, analyst, and trainer. I've only seen Rufas on Twitter speaking about trading, and I know you run classes on that, but today we'll be teaching us how to invest in KPC. Asante sana for coming.
Thank you. Thank you for hosting me.
Yeah, so before we get to you, we don't want to stand you in the first minute you sat. You can take a deep breath now, and then we'll get to Gift again. Gift, you've mentioned that there's specific percentages that go to specific sections of investors. What stops a Kenyan politician, and I say a Kenyan politician in bold, from scooping up 100% of the shares for the public?
Speaking of which, I know you've said different tranches, but this also the members of the political class still present as regular people. Like, you're a person who can buy a share. You can also be a foreigner if you have enough to change your name, and then you use the 11 billion from share to just buy part of the shares. How do you exactly, just what Tom was asking, how do you stop someone who is on the inside from grabbing more shares?
Okay, so this IPO will run for until the February of 19th, and all of us have an opportunity to put in our bids for the number of shares that we would like to buy based on, so a certain politician could have 3 billion shillings sitting somewhere, and they would like to invest all of that money into this company. What happens after the IPO close, there's an allocation period. And basically, after all the bids have been received for the IPO, there's a system, which again, we've said 20% to retail investors, 20% to, so that those amounts will be allocated as per that system. So that not one single shareholder will be able to buy all of the issue. So the shares can be allocated pro rata. So for example, what needs to be raised is 100 billion. Yeah. If they get offers worth 1 billion shillings, then they will have to divide. They can only take 100 billion. So what happens to the rest of the 900 billion? So if, for example, Justine, you had said, I want to buy
somebody that's coming 100% from government, everything seems like too clean. Like the company doesn't have as much debt. They have plans to expand. They are looking into fiber optic, LPG. So everything is laid out so nicely. People are like, hey, is this thing still real? Yeah.
There has to be a plot twist somewhere.
Yeah. So it's quite a good concern. It leads to more people learning more ways to analyze a company, an IPO, and then being able to make an informed decision.
Yeah. Some people are saying that the stock, the stake, the per share value, which is 9 shillings, is up to 30% more than the actual valuation. And there are fears that once you buy up the shares, they'll fall back to the actual value, which is, some people say, around 6 shillings. That would mean that if I invest 10 shillings, I'm going to get 6 shillings in value in the next 2 months or 2 years to come. Is that a fair assessment? I don't know if that can go to you, then Rufas will give us his opinion.
Okay. First of all, let me start by saying that valuation is a very subjective exercise. For example, if you started a business today, you know about the sleepless nights you know about the number of times you were almost auctioned, and you have a certain value that you believe that your company is worth, factoring all those elements. However, there are also scientific methods that are used to value companies in this case. So, for example, there are many ways you can value a company. You can look at the dividend earning potential, you can look at the price to earnings multiple, and you can look at the forward-looking performance of the company from a cash flow perspective and discount it to the value of the company today. Now, all of those sound very complicated, but I think where the concern is coming from the public is that in comparison to the other listed entities, this IPO is coming at a premium. But I think the valuation of the company is based on the fundamentals of the company. So if you look at, for example, and this is not investment advice, let me just qualify that.
Absolutely not.
Yeah, but if you look at KPC from a performance perspective, it's been the highest dividend earner for that national treasury. So consistently profitable, consistently paying a dividend to the exchequer, albeit I think more than Safaricom at the moment. So it's a highly profitable company. It operates within a monopoly of sorts, meaning that not susceptible to competition in the near future. Strong fundamentals, regional play, the ability to expand into other regions, and a very diversified product portfolio. So if you go into the details, you'll realize that they're not just transporting fuel. There's so many other things that they do on the side. And that means then the revenue is diversified, and sort of investors are guaranteed a good return over time.
Right. And I'd like us to move on with this conversation. This is not the first IPO. That's something we touched on a bit earlier. Safaricom did a massive IPO in 2008, which, according to data, is actually the largest IPO, even beating this one in current value. I think twice as large as the current, if adjusted to inflation and things like that. And Kengen also had one, Cooperative Bank had one. Is this a sure win, or are we still betting? Because you speak as if this is a sure win. I know you said this is not investment advice.
Like I said,
could this fall apart?
You have to analyze each company on its own strength.
Yeah.
So, for example, when Safaricom IPO'd in 2008, it IPO'd at an initial price of 5 shillings. Then it went up over the next few weeks to 8 shillings. And some investors made a killing. That's almost 60% in a couple of weeks. And then the share price tanked to 2 bob. And many guys also lost money, especially those who came in at 8 bob. And then over time, the price rose. I think at the height of its peak, at its peak, Safaricom was valued at around 43, 45 shillings.
What year was that?
This is just in the 2020. Yeah,
so
just before COVID.
2008.
Yes.
Did the trajectory incrementally go up, or did it just like do a weird jump at some point?
No, it went up slowly by slowly, from 2 bob all the way to 20 shillings, then it touched 30, and at its height it touched 40, and then it started falling again, and by 2023, post-COVID, I think 2023, which was the rock bottom in many years, it was at 13 shillings, and it's now back up to 29 shillings again. But to your question on whether this is a sure bet or what, I guess what, from an investor's point of view, is what's the risk? Is there a risk that and we've seen this trend where companies IPO, the share price shoots, and then it falls. Or the company IPOs and the share price falls immediately after the IPO. But that's usually not just because of the valuation. There are many factors that are usually involved. For example, post-IPO price support, for example. So after the IPO, many people will want to now cash in. So for example, if Kengen now goes up, KPL's Kenya Pipeline, KPC, goes up from 9 bob to say 12, 13 bob, most people will want to take profit. Yeah. And that could actually result in a selling frenzy. And you know economics 101, when supply is more than demand, the share price will fall. So there is a lot of moving parts to the conversation, but valuation is always the true valuation. And this IPO exercise is usually a price discovery exercise.
Okay.
You are actually trying to determine what the true
price.
value, and that happens over time. It doesn't happen overnight. So speculation could actually result in the price tanking or going
upwards. Rufus, the Kenya Pipeline Company, Treasury, government proponents, they all say that this is for the better of the company and for Kenya in general. More money for infrastructure. So, for instance, this whole deal is supposed to bring to the government 100 billion shillings, which it said it's supposed to go into infrastructure.
Yeah.
And they say that it's a plus. You get more money. You offset shares in a company that is very profitable. People like you and I could buy shares. And above that, you get a corruption-free Kenya Pipeline Company. Is that true that private interests becoming more than public servants managing the company, does that result in less corruption?
Well, it gets more efficient in that for any company, it owes its allegiance or performance to the shareholders. So as soon as the people get at least 65% ownership in this company, then that means the same people will have more votes on the board. So people will decide who is in leadership in this company. So voting is usually based on the number of shares held. So the government will have 35, which means that the people will have more voice on who runs the company. So that makes the company more efficient because performance is now tied to remuneration. Whether you are the CEO, whether you are the director, your performance is tied. So that makes it more efficient. On the other side, I would say a company that has been generating profits of what? Up to 10 billion shillings per year. In order for the government to get what? 100 billion, it means that the government would have to wait for 10 years or roughly 9 years before they collect 100 billion from the company. So making a one-time sale and getting the 100 billion basically means that a source of revenue for the government that has been consistent has now shifted. And that might not be a concern for the current administration, but then if you think 5-10 years from now, that 10 billion would be there. Yeah, I think that's a key challenge from the public side. But then on the private side, it's a benefit where now people get to benefit directly by owning Kenya Pipeline Company.
Maybe I have a bit of a problem.
Yeah.
The way this thing is structured, it's very utopia. It feels like, oh, they have all these elements to it that would work, but it was gambling. Like,
well,
and this goes to both of you because I am just very curious. Like to a certain level, it just feels like we're hedging our bets on something, and we could literally end up losing. So,
well, all investments carry risk. So even Kenya Pipeline, even if they say it's a monopoly, zero debt and everything, it also carries risk. For instance, as he has mentioned, if you observe the 2.8 listing of Safaricom, the shares were issued at 5 bob, but then within a few days they had dropped all the way down to 2 bob. And then eventually the company gained value and the stock gained over time. So a similar thing could also happen with this one. But then personally, I think it's better to look at the numbers. Numbers don't lie. And critically, for the last 10 years, the company has been consistently profitable. So that's information that is very clear. The company is not in huge debt. That's a good thing going for the company. And then on the risk side, I would say the company operates with about 120 clients. So most of these clients are oil marketing companies. And a risk I would be concerned about would be about 85% of the revenue the company makes comes from a very small number of the 120 clients they have. Usually, I believe around 15. Top 15 clients provide 85% of the revenue. So if something was to happen to the top 15 clients, then that would affect the revenue significantly of the company.
And how would that pour back into my pocket? How would that affect me if I bought stock?
Yeah.
Well, for stock traders, they basically hold a stock based on the belief that the stock will gain in value over time, right?
Yeah.
So they look at key performance metrics of the company, and one of the performance metrics is called revenue and earnings per share. So you want to see a company that is growing in terms of revenue. That's the amount of money they make by selling their products. So you want to see that revenue consistently going up. And then out of that revenue, if the company is efficient, then the profit will be good. So if revenue were to drop because, let's say, something happened to Total, something happened to Vivo, or any of their top 15 clients, then that would directly affect the valuation. And if the company is not meeting the revenue targets, investors tend to lose faith in that company. So in that case, remember, it's not the only stock on the market. So investors tend to rotate to stocks that are maintaining high revenue growth.
Yeah.
Yeah.
That's a very good explanation. I think it's important for us to know those risks. We've been speaking so much about the positives that we might lose track of the risk.
Yeah, I'm not getting like an answer from Iki to Siga.
Please press. What do you mean, Justin?
And I feel like Rufas has really defended. Like he has stood on that goal, like just hitting. But like I'm still.
You think?
Doubtful.
Okay. No, and I will piggyback on what Rufas said because, as I said, all investments carry risk. So, for example, if you, and I will break it down to you and the business that you do. If you and your friend decide to go into business and you put your money into where your mouth is, you carry risk. You know, you say this thing could either work or not work. Is it a gamble?
Yes.
Yes, but it can be supported by data. You'll say, I have done my homework. In this row in this street, there is no butchery. Yeah. Yet the population around here is growing to 5-10 times every year. There's a growing middle class. More guys are changing into better lifestyle, and they're looking for healthier options. That data helps you arrive at a decision on whether you should go into that particular business or not. It's the same thing for KPC. So the best we can do is lay out the fundamentals or the metrics for KPC, and let those metrics then help you arrive at an investment decision. Whether the company will make money in the next few years or not, no one can tell for sure, but it can only be supported by the data that we are currently looking at. So yes, there's an element of uncertainty, but then the numbers will always, the numbers don't lie.
The numbers don't lie.
The numbers don't.
Allegedly. Rufus, Rufus, you know trading more than Justine and I would know. You probably can match up to that skill level. But Rufus, how do we start buying this stock? Kenya Pipeline Company is doing a massive public participation / advertising / marketing campaign on TV stations, in the streets, with even road shows. But I still, to this point, don't know how I can buy KPC shares.
Well, the first thing you need is a CDSC account. And this is the account where you're able to transact, buy and sell shares. So the process is usually very simple. As long as you have a Kenyan ID or passport, you have a set of passport photos and a KRA PIN certificate. Once you apply with your bank or investment bank, and I believe all banks and investment banks in Kenya are qualified so far. That is, they have been appointed by the CBK to handle the buying and selling of shares.
Yeah.
So once you go to your bank, you'll fill the forms, and then I believe right now less than a week. Yeah, in less than a week you get your account.
You get your CDS account.
Yeah.
You can actually open an account online as well. So you visit, you can go online, look for the CMA licensed brokers, and there's a whole list of them. And when you go onto their websites, you can actually open an online account. That actually takes under a day, subject to availability of the information that is requested there. So it's actually become more efficient.
Yeah. So as soon as you have your account approved, the next thing, they have an app. You just download the app, you will get access to all the shares at the NSE, and you'll be able to buy directly using your bank or M-Pesa. Yeah.
And you've just said, you've mentioned the bank. What if I don't have a bank account? What if I don't have a phone that can connect to the internet?
Well, as per the information we have today, that would be impossible. However, with the new leadership at the CMA, we know that they are doing a deal with Safaricom. So in the near future, there will be an app where you can basically access, buy and sell shares using the Safaricom app.
Easily.
Yeah.
There's something that I want to press you on a bit, Gift. You said that there's 20% that is allocated to foreign investors, right? By foreign investors, you mean companies that are based anywhere outside of Kenya.
Yes.
And for that, it could be a shell company somewhere. I'm speaking specifically because at some point in 2002, while Safaricom was about to go public, there was a company that was called Mobitelea shares that, I know this is something that you can't speak to just because of the controversy, but the company invested through shadowy companies in a UK jurisdiction, and they bought up 25% of what at that time Vodafone held, and that company remained shadowy to the end. And allegedly some of the company owners were politicians in the Moi era. Well, that's never been confirmed, but the fact that the shadowy figures kept the shares and cashed out to almost 10 billion Kenya shillings after the deal, that raises questions. I mean, how does NSE make sure that no politician is running circles around the deal and trying to do something through other means?
I'm not sure whether I'm allowed to comment on that.
I understand.
But what I would say is this: it's a public offer, and I think Kenya has come a long way in terms of creating anti-money laundering regulations, and there's a lot of checks and balances right now as to how investment flows in and out of the country. One of the reasons why it's actually is Nairobi still by and large regarded as a financial hub for the region is because of the ease of doing business. And that means that investors need to be able to come in, do business, but also more importantly, be able to repatriate money back to their countries. Now, when you open a CDSE account, there is certain KYC documentation that needs to be provided. So you will need to satisfy with your broker that the person who is actually bidding to buy the shares is the actual person, whether it's a corporation or... Now, is that to say that shadowy figures will not be able to come in and buy shares? I don't think we can say with 100% certainty that that will not happen. But I think the CMA has been working around the clock to make sure, together with the CBK, to make sure that we have enough guardrails to sort of safeguard us against money laundering activities. Case in point, I know we are currently operating in a very low trust environment as a public, and therefore everything has to be sort of scrutinized with a double lens and magnifying and a microscopic lens. But I think this offer is open to everybody, and I think the necessary people who are in charge of opening CDSE accounts, transfer of money into the country, will do their part in terms of making sure that then the utmost standards are upheld in terms of facilitating investors in this IPO.
So fair answer.
I
think there's another way of understanding the flow of money into, let's say, a stock. For instance, if let's say some guys, let's say billionaires, decide to gang up through, let's say, some funny accounts to access a good number of shares, the risk is the same. Like the risk for the retail trader versus the billionaire shadowy character is the same. If the share goes down by 10%, even them, they also lose by 10%. So the risk outlay is the same. So the advantage is that any stock market out there, including the New York Stock Exchange, London Stock Exchange, they all benefit from foreign investors. When there's more money chasing after the same shares, price tends to go up. So if you look at some of the biggest funds abroad, let's say the BlackRocks and the big banks, when they're making allocations into their portfolios, they will look at the top assets, they will look at bonds, they will look at their own stock markets and indices, and then they also consider investing in what we call emerging markets. So they will allocate some cash, let's say, to Brazil, to Iran, to China, and so on. And then a small amount goes to what we call frontier markets. Frontier markets are slightly smaller than emerging markets, so Kenya is classified as a frontier market. So I would say we have consistently depended on that inflow as a foreign direct investment, where some of these banks invest in those stocks, and when the stocks perform well, they get their benefits. So it's actually a very healthy thing having a lot of foreign investors push money in Kenya. So the other advantage is that if there is a lot more people who are looking, let's say, to buy Kenya Pipeline Company shares, the demand might not be impactful at the IPO level, because shares can be like 5 times subscribed. Let's say they're looking for 100 billion and the offers are, let's say, 500 billion. They will still take the 100 billion. And then for the rest of the guys who did not get enough shares, they would have to go to the market and then buy the shares from the one who got in at the IPO level. So that basically means that there will be more demand. If there's more demand, then that drives prices higher. But then we still can't ignore the risks with the company itself. Yeah.
I'd like for us to get to the good things. Gifts. NSE was the best performing stock exchange in Africa in 2025. That's a huge achievement. What contributed to that, briefly?
Okay, so I think it's a mix of factors. If I take you back to 2023, the NSE was the worst performing market in Africa. And that was largely due to the foreign currency trouble that we were in, where we saw massive foreign investor outflows, and that really impacted the share prices of many counters on the exchange. Not to say that the fundamentals of the companies had changed, but it was something that was initiated by global macroeconomic instability. Now, fast forward to 2024 and 2025, we've seen 2 things happen. One, on the macroeconomic front, and 2, on the investor sentiment side. On the macroeconomic side, I think this, all fairness to the government, I think they've done quite a lot of work there. If you look at, for example, the shilling, the exchange rate has been very stable over the past 2 years, which means that investors feel confident that they can come in and go out without necessarily losing money to forex shocks. Then look at the interest rate environment. Interest rates have consistently fallen in the past 2 years. From the T-bills were at some point trading at 16%, then that T-bill rate is now at around 8%. If you look at inflation, also has come down over the past. So the macros are really stable, and that always creates confidence among investors. But at the same time, it also initiates a reallocation of assets to assets that can give you a better return. So for example, with the falling interest rates in government bonds and the slowdown in government borrowing, we've seen investors now reallocate their money from government bonds into shares. And that has really been one of the driving factors for the increase in share prices in the market.
I want to interrupt you because you speak about macro figures, and they look good. Inflation, GDP, all these figures are nice. What about the micro? While NSE is swimming in money, a lot of Kenyans, around 31% of Kenyans, which is almost 16 million people, are unable to meet the food poverty line. Is that really a fair assessment of the country's success economically, NSE?
First of all, I don't know whether NSE is swimming in money.
Well, looks like you are. You're the best performing stock exchange in Africa.
What I would say is that and I was watching the previous episode last week, and Julian's made a very good point around how the impact of economic recovery is felt from both from the macro and to the micro level. So at the macro level, yes, it will be seen quite quickly. When interest rates fall from 16 to 8%, it translates almost immediately. But then for that impact to be felt in the economy, it takes time for that impact to actually reach the household levels. So that translation from the macros to the micros might lag a bit, and that's why maybe people are feeling the money is not in the pocket. But I think there might be other factors that are involved that are beyond my knowledge. But then I think in terms of liquidity, one of the things that I would say is as we head into an election year, I think there will be more government spending, and I think that should translate into money in people's pockets over the long term. I'm not saying this is campaign money. I'm just saying that I'm saying that it takes time for the macros to actually filter through to the household level.
Okay, I think my last question would be, what happens if this IPO tanks? What if it's not successful? I think Rufas, you should take that.
Yeah. So, what do you mean by if the IPO tanks?
Okay, not tanks, but like they have 11 billion. Yeah, exactly. That's the word. If it's undersubscribed, what happens?
Well, I believe they still have chance to sell more shares. So just because it's an IPO doesn't mean that it's a thingy that ends on the 19th. Even in future, the company can issue more shares in order to raise funds. Yeah. So if it's undersubscribed, there'll still be more room to sell. They can even extend the deadline. But then the real concern is not about whether people will be buying these shares. The real concern is, are you going to buy at 9 bob and then the stock is stuck at 9 bob or below for a good period of time? Because that would be a risk, right?
Yeah.
So as I mentioned, we look at both sides, the opportunity and the risks. So on one side, the company doesn't have a lot of competition. It basically has a big moat, meaning that the revenue or the source of revenue for the company has been consistent, and it doesn't have a lot of other companies competing against it. It has a very strong barriers to entry. You can't just come and set up your own private Kenya Pipeline 2. Right?
Yeah.
So you can't just do that. Also, they're also limited in terms of expansion. They can't double their, let's say, pipeline facilities within the next 5 years. That would be almost impossible. So on one side, it's a very mature company, and revenues are intact. But then we also know that the revenues are dependent on the price of energy and the consumption of energy. So when there is a demand for energy, and that tends to increase over time, even for you, the number of devices you use and your energy demand keeps growing, the population keeps growing, more demand for energy across the region. So that we know it's a fair bet that demand for energy will continue to rise. So global prices, on the other hand, if they rise too hard, people reduce their energy consumption. So that can be an extended risk to the company if global energy prices kept going up. Yeah. So the other key risk we saw was with when the Kenya shilling had really lost value. I believe it got to 160 what? 169?
Kenya shilling?
169 to the dollar.
The dollar, yeah.
160.
Yeah. So that significantly increased the costs that the company faces in their normal business operations. So if the Kenya shilling was to be unstable and lose value to the dollar, then that would become a significant cost to the company. Yeah. So given what we have seen in terms of stability in the Kenya shilling dollar rates over the last 1 year, is actually too much of the benefit for Kenya Pipeline. So on the other hand, with new leadership comes new plans, new goals. So if let's say after IPO, there is a change of directors, people get to vote new management, then that could impact the new plans for the company. Maybe they could get into a newer project. Similar to what we saw with Safaricom. Safaricom deciding to go into the Ethiopian market, and then that impacted the shares, and we saw how they dropped from 46 all the way down.
Yeah.
So it's not a risk per se, it's a wild card. It's something that could happen but hasn't happened.
Yeah.
Yeah.
It's a risk. It's a risk, as you said.
Yeah.
And if Justine, you have any other questions to add on that?
Nimeelewa.
Are you sure it's not gambling now? Or are you like
No,
convinced?
yeah, I'm still sure it's gambling, but like I do understand what is around it. It's not just
It's a
CJ
calculated risk.
Yes,
I
that's
think that's what you would call it.
White collar
Absolutely.
gambling.
It's a white
White collar gambling.
white collar gambling.
Well, I can help define. So when you're investing in shares, you're putting in money in a business enterprise where there is a positive expectation of growth, right?
Yeah.
So that growth is dependent on the company just continuing to do what it does. So that's a calculated risk, and you can exit. Like for instance, if you buy at 9 bob, even if price drops by 1 or 2 bob, you can sell at 7 bob and get out and maybe buy another investment. So in gambling, you usually don't have control of the outcome. For instance, if you bet on a game between Manchester and Arsenal, whether you are there, there is really nothing you can do.
Change.
Yeah, you can't change the outcome. Yeah.
All right. I think that justifies it just a bit, Rufus. Just a bit.
Less of a
Just a bit. You were saying something about gift.
No, in terms of how people can access the IPO,
Yeah.
I think it's important to mention that this is an e-IPO, which is the first of its kind
yes.
in the history of the NSE. And that means then every investor anywhere can be able to access this IPO. For those who do not have internet, there's also a USSD code that has been provided. I believe it's *483 *816 hash. You dial that and you follow the prompts. With your CDS account, you will be able to buy, or you can go onto the online portal. I think it's kpcipo.eoffer .app, and you will be able to enter your CDS account and put in your bid. So no long queues, no forms, it's all digital, and that's the new NSE.
Si lazima uende Huduma Center.
Kuna kitu kama Huduma Center. Yeah. You can do it at the comfort of your bed.
All right. Justine, I think we can get to the tail end of the show.
Yeah.
Time. So usually, gentlemen, on this show we have a segment called Public Participation, where we let Kenyans know what they should be focusing on. Last week it was Safaricom, coincidentally. We have not spoken about KPC because it already happened, and now all you can do is buy the shares. And I think we've dedicated this entire episode to that. So this was, what we've just done for 50 minutes was the Public Participation Plus. But this is now the actual public participation. From February 1st, if you're earning over 108,000 Kenya shillings, you'll be paying more in pensions to NSSF. Where did this come from? So in 2013, the NSSF Act was passed, assented, and that meant that now NSSF had a schedule that it had to stick to. But that was held in court for over 10 years. People said that it wasn't fair and that the court should consider just throwing out the entire act. But in 2023, the court passed it. It said that this was fair and Kenyans should contribute more to pensions. So starting February 1st, the tier 1 for contributions will be raised from 8,000 to 9,000 Kenya shillings. Actually, I should be using is because this was effective yesterday. And tier 2 will be will be raised by 36,000 from 72,000 Kenya shillings to 108,000 Kenya shillings. The history is very complicated, long and winded, but next year, a time like this, after 1 year, a change will also occur. And as I said, this was supposed to be done in phases. So we started counting from 2023 to 2024, that's 1, 2024 to 2025, that's 2, and then this is 3, and so this is the 4th one. So it means that next year, it will be at the disposal of the Cabinet Secretary using figures like the average low income or the lowest wage in the country, and then that will be used to define how much the lower and upper tier will be raised by in the coming year. But from now on, it seems as if this act, as much as it's in place, the contributions to NSSF will keep increasing. And this applies to also your employer, which brings me to the effect of this law. It means that more money will be saved by NSSF, obviously, because your savings will be increased as a percentage of your income. And also for employers, it's bad news because they'll have to match how much you'll be contributing. So if your income leads you to a pension contribution, 6,000, your employer has to put 6,000 in the bank as well. I don't mean in the bank literally, I mean to a pension fund to match that amount. So your employer will have to increase the cost of keeping you at the job, which means that possibly some employers will have to retrench people. Time will tell. But inequalities could also become a bigger issue because high-income Kenyans will save more, and as a result, they'll have more money at their disposal once they retire. And if you're earning less, you'll have saved less. So this will possibly have an effect on income inequality after retirement. Now you know, contribute. I don't know if it's something that you can choose not to do because it's mandatory contributions, but that was public participation for this week. Justine, explain something badly.
I don't know if you guys saw, but they're Airbnb the Kenyan economy. So GOK is setting aside a portion of 5 billion annual tourism levy to repay private investors of the new Bomas International Convention Complex. It's BICC in short. So KCC is getting a twin, you guys, and they're already asking us for money. So currently, Kenya charges a 2% tourism levy on gross collection of receipts from hotel stays, meals, drinks, and other sherehe-related activities. The government also wants to collect another 2% from Airbnb and Booking.com charges. What Airbnb mepatikana? Airbnb owners also should just change their names from Airbnb to Airbnb fee because these charges will definitely be passed down to consumers. The tourism levy raised about 5 billion from the year ending in June 2025, and they want to set aside 4% of that to go to private developers. So being a private investor seems to be the fastest way to secure that Kenyan bag. Actually, that bag is open. You can just pick up whatever you need, even if it's just to build an affordable washroom. Good luck. So this decision to set aside revenue to pay private investors is being seen as innovative. And it's also a way to redefine how major infrastructure projects are financed. If you've ever doubted that building hotels is innovative, GOK is proving to be the Marie Curie curator of sleeping spaces, so shout out to them. The government has identified a gap in the meetings, incentives, conferences, and exhibition space. That's the MICE space, that's what it's called, Apanya route, if you will. And it's true that Kenya could use a lot of auditoriums. We don't have auditoriums, we don't have indoor venues like Rwanda, but taxes to private developers pipeline feels a bit like entrapment. Why can't the funds just be set aside and go directly into building the project? Maybe that's how I would have done it. The government sees the hotelification of Nairobi as a good thing, but experts say that the sector could be pressured to put aside money even when the tourism industry is not doing so well. So, however, GOK is disputing all the experts, saying that Kenya should give all those doubts to Thomas. So, Shikaton. If you doubt that their business plan of how BICC will make money, don't worry, because the Macron bells are ringing and the complex has already been booked for the France Africa Summit happening in May 2026. The complex is not done yet, but fingers crossed, just like those affordable housing, by April 2026 they will all be finished. So from big collectors to big spenders, but no development. Last week, the Embu governor was mulikwad, like those LED lights on vehicles, for diverting 10 million meant for a county industrial park to fund a political event. Here's that clip.
You're not special. You are under oath and you have an obligation constitutionally to tell the truth.
It is you who is saying so.
Governor,
I didn't say so.
Could you address Senator Sifuna through
He's
the
also
chair?
now he's harassing me.
No. I will
protect
make
me
that
from
determination if I feel.
He's now harassing me.
You are harassing the chair by talking when the chair is talking. Please listen to me.
So her actions just show that fiscal discipline in the country is as foreign as what was being sold in that butchery in Kasarani.
Could you address
The 10 million shillings that was spent on the Boda summit attended by the deputy president. That summit was attended by the deputy president. As the oversight committee was grilling her, she said she was under immense pressure at the time and that she will never do it again and that she will refund the money. The word that used to be used for such activities was embezzlement. But with this government, it's a quick, sorry, bus. Boda guys denied receiving any funds from that empowerment drive and that their name is being tarnished. And a promise being a Boda debt is not a way to use county funds, surely. However, the Boda circles are not the only ones who are being scapegoated for receiving love and warmth from county funds. In Vihiga, the county assembly spent 5 million Kenyan shillings on a housewarming party for the governor's residents. 5 million. That's like half an industrial park in Embu, or is it like half a Boda empowerment? I'm not sure. 5 million for a housewarming. I think winter came to Vihiga and no one told the residents. Also, are there no Kiberiti sellers in the entire county? Vihiga's pending bills currently stand at 1.7 billion Kenyan shillings. But the governor and the county assembly were like, if that money you have can't solve all your problems of pending bills, warm that house. When he was grilled by the Senate committee, he didn't even have an excuse. He just pledged to take action. And maybe part of that action is to look into the mirror and yell, wewe, usirudie tena. I think that's because there was no consequences. And governors are treating public coffers like personal wallets at this point. Even your personal wallet gets a little bit of respect because the funds have a limit. Surely you can't just be spending it all. And currently from big spenders, we are moving to people who don't know how much it takes to educate Kenyan children. So, speaking of lost money, the education CS say that the government doesn't have the exact figure of what it costs to educate a child from basic primary education all the way to university. Here's that clip.
What makes a child of grade 7 require so much more than one of grade 6, yet they're actually in the same institution?
We actually, as a country, do not know how much it costs to educate a child from grade 1 all the way to university.
So our whole education sector is just using vibes as a compass in capitation. I don't know if the CS knows this, but ignorance is fees. There's a school that's charging people 50,000 Kenyan shillings for uniforms. That's at least the deposit of land in Kamakis, surely. And yet the government can't even put out an advisory because they don't even know. That's why even last year, I believe, 87 shillings was sent to a school in Nyanza. They didn't even factor in Yakutoa. At the moment, Kenyan parents are having their annual meetings with bankruptcy because the cost of books is so high and that of uniforms and fees, while the ministry is relying on the wisdom of guesswork. The Ministry of Education should really have that math down to the last decimal so that they can ensure that the budgeting process is inclusive. They can't just continue exceeding expectations in incompetence. Personally, I believe children's education and every other effort to educate children is at stake right now. So I need the entire Ministry of Education to get some calculators and get to counting. Yeah. Mmesikia.
No, mmesikia. Still like, mmesikia.
I'll use like a stern parent voice. I don't know if that helps.
Yeah, asante Justine. It's just worrying to see that so much money is being lost. Mm-hmm. I'm glad that we had this conversation, but in the backdrop of Justine's conversation, we're making all this money, we might lose all this money in infrastructure. So that's beyond your control. I don't expect you to address that gift. But Rufus' gift, I'd love for you both to have a final round of remarks. Rufus, for instance, I'd want to know how you think the young people can engage in trading going forward in 30 seconds.
Yeah.
Actually, 10 seconds.
So I think it's a good thing happening with KPC. There are a lot of investor education that has happened, is really good. But then we have to shift from this economy where there were traditional barriers to investing, simply because a young Kenyan who wants to buy Bitcoin can just download an app on Binance, then buy it using M-Pesa. That will take a couple of minutes. In Forex, it's usually very quick. With FXPesa, you're able to download an app online, install, do KYC within 10 minutes, deposit and withdraw very fast. Yeah. So this process where you have to get a CDSC account, you have to go through all this period waiting before making your first decision, is putting us into a section where we look like a traditional market.
Okay.
I think it's time to digitize.
I think he's mentioned that what do you call it?
EIPO.
EIPO.
Electronic IPO.
Electronic IPO. Are you guys confident about the stock going forward?
Yes, I think the stock market in KPC.
Yeah.
I think, yes, we believe that this is a very good opportunity for Kenyans to participate. As the NSE, we have been on a very good trajectory. The last 2 years, if you put money, last year, if you put money in the NSE, you would have made a return of 52%, with some counters touching 517%. The NSE itself is a listed company, and last year we returned about 250%. So it would have been a very good investment for you to actually make. So we are encouraging the public, especially the young guys. This is a very good opportunity. We've not seen a major IPO in a long time, and many people will be looking to dip their toes into the into stock trading, and this is a very good opportunity for people to try out and to let their money work for them. Yeah. I think so. We encourage all and sundry. If you have go reactivate your CDS account if it's dormant. If you don't have one, go to your nearest broker and open an account. But it's time to actually come into the market and invest.
Asante sana. Asante sana. That's what I meant when I said you're swimming in money as NSE. You just said it yourself.
Our investors. Our investors are making a good return.
All right. Yeah. Asante sana, Gift. Justine, unfortunately we have to wrap it up. Gentlemen, Justine, tumefika mwisho. We've run out of time. You can follow me at Tom Mukhwana, at Tom_Mukhwana on Twitter and Instagram. Justine?
Oh, you can follow me home. No, you can follow me at Justine Wanda on all my socials, or at Fake Walk with Justine on all my socials.
Yeah, and follow Big Picture as well. We have been wanting for a while to get on TikTok and Instagram Live. I know the social guys are behind this camera and they're listening. Yeah. Work hard, guys.
Tom doesn't know how to dance, so please try to support the Big Picture out of pure work. That is
you cannot get any dancing out of me. So yeah, support us for this work that we do here. And please send in your comments on YouTube every time that we are live. We'll be happy to engage you. Rosalind Onjeru says, this is an awesome discussion. Question, do you think the KPC investment is going to outlast political uncertainty in the next election cycle? I don't know how we didn't think of that question. Do you want to take that, Gift? Rufus? The Gift will start, please.
Okay. I think, yes, I think so. We know that anytime we go into an election cycle, the market is usually, in a way, impacted because of investor confidence, really, and we don't know how this next election is going to go. But what I would tell investors who want to buy the KPC share is not to lose sight of the fundamentals. Elections come and go. KPC, I believe, will be here after the election. So
typical salesperson, you're like, Angalia the next 10 years. One thing about now. Rufus.
So typically, every country goes through an election cycle. In most developed nations, the election cycles tend to be positive for the stock market. That is, people expect the new leaders to bring in new ideas to support the market and everything. So for instance, in the US elections last year, but one in November, we saw the US stock market spiking as a result of the elections. So for Kenya, I believe we still have this nightmare of 2728. Yeah. So every time people expect things to be the same, but I think we have really improved as a nation. Yeah. So since we don't expect anything similar to 2728, then I normally say a dip is a gift. Yeah. So if people are running away because there is an election, the stocks just become cheaper for you to buy. So
it's like you flipped what he said, just different words. But asante sana Rufus gift for coming to the show. Remember, follow us on Big Picture on all platforms. Justine, asante for being the awesome host that you almost said guest. Shame on me. Asante sana Justine. Thank you for watching us. Rosalie, asante for sending your question. Send your questions every week and we'll ask the guests who are with us here. See you next week. Big Picture returns next week. Bye.